So I was talking with a client the other day, and they were asking for my thoughts as to how the market would do this year with everything going on. And I typically don't offer longer term stock market projections or opinions, only because things can change so fast. So practically in terms of managing investment portfolios, we want to do that using current data as opposed to past projections. But one thing I would say, and that I did say to my client, is that the ride this year will probably be a bit more bumpy. So what do I mean by that? Investing in the stock market over the past year or so, well, we've been a little spoiled. We're coming off of 2 consecutive years of gains of greater than 20%. And more notably, we've had that with pretty low volatility. Historically speaking, the S&P 500 experiences a drawdown or a pullback of 10% or more about once every 13 months on average. This is what's known as a market correction. The last correction we had was from August through mid-October of 2023. We had a dip of just over 10%, so it was actually a pretty mild one. So history would suggest that we're probably overdue. And yeah, I'm expecting we'll see a correction sometime this year. But this doesn't mean that we should necessarily have a pessimistic view of the market. On the contrary, there's actually a lot of good signs. The economy is strong, unemployment, statistically speaking, is low. And as this chart from Carson Research shows, lately post-election years have been pretty good years for the stock market. So by all current indications, the stock markets may indeed be higher at the end of the year than they were at the beginning, as is the case about 75% of the time. Just keep in mind that volatility is the toll we pay to invest. It's the price we pay for long-term performance. I hope this was helpful, and I'll see y'all in the next one.